Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap, the Wednesday recap. And I guess if you're going to read the headlines, we have another new high in the markets. Yippity-doo-dah. It's funny, you know, every time a new headline's made, some people are upset, some people are happy, some people are like, okay, it's just another one of the days that it's been going on, like what, 45, 46 times. You know, it's really just how you have to navigate and see where the action is. And you know, the market's been very tradable. If you're looking for setups, if you're looking where the money's going, if you're looking and being tactical, there's definitely lots of things to do. Yes, some things aren't acting well, and we have the haves and have-nots. So be short the have-nots and try and be long the haves. It's that simple, right? We'll all be millionaires. Anyway, I just want to go into some charts and show you what's cooking a little bit. If you recall last week, I think what was it on, or it was Monday? Okay, you had this, you know, this kind of a, you know, choppy flag type action where you start to see a little weakness in some of the other sectors. So this night, you know, went out short. Okay, went out short. The spiders, the Qs, the IWM, not for a top, because a lot of people have been trying to call a top this entire time, but just for, you know, a trade. We closed below the 8-day for the first time, you know, so it made some sense. Okay, and then all of a sudden, boom, you had that up day and engulfed the 8-day. So if you said, okay, I'm going to stay short, not take the trade, because I think that this time is different, you then could have made some adjustments right there. You know, I posted the chart that day. I said if the bears have any control, they do not let the bulls reclaim the 8-day, or at least trade back above a prior high, which was 2,065. And if you covered there and said, okay, you know what? I'm staying with this unless, you know, I'm keeping a third to get stopped out. Boom, you know, you got stopped out there versus adding and, you know, maybe being, you know, a little bit underwater as we now look like we're going to be breaking out to highs again as, you know, this channel started to reset up. And in the Russell also, when I came in short that, you know, this was that first day of relative weakness, if, you know, even weaker than the SPYs. Guys said, okay, you know what, Red Dog's going short, he doesn't short a lot, let me go short too. And then, you know, after this move, I covered into this, even though it did take, you know, close below the 8 and 21 day, but this is a, you know, a 2-day move, decent percentage, probably about 4% or so. Why not take it, you know, to see at least what type of bounce there is and whether you could short the bounce. So if you did cover, which I think some of you guys did with me, you probably said to yourself, you know what, if the bears have any control, you know, they should not let the bulls reclaim the 8 and 21-day moving average. So what happened? That day could have given you a little bit of a pushback saying, okay, you know what, we probably, you know, probably shouldn't have at least engulfed that action on you know, Monday's action on Tuesday. So that was one little sign to maybe cover if you didn't cover on that day with us, you know, versus getting, you know, stopped out through this high, or you didn't even get stopped out there. And now you're like, okay, what do I do here? And at this particular point, you know, this is setting up, you know, a pretty high-level channel that at this point, you know, some are still thinking this could be, you know, a right shoulder of a head and shoulders pattern, but at this point, it's almost a little bit of a reach. And why be stuck in harm's way when, you know, you had a little bit of a window here to get out, or at least just take the trade when, you know, you haven't had more than 2 down days in a while in this market, you know, instead of being short, rolling it up, and who knows what happens if it takes this out. You know, if it takes that out, you know, you look at the weekly chart, and all of a sudden, you know, it could get a little momentum. Okay, I'd say, yeah, it kind of cleared this and stayed above this, and you know, you know, you've seen these topping patterns fail, you know, into this range, but one time it might stick. So when you want to look for little signs to figure out whether it sticks or not, you know, if it was really that weak, this probably wouldn't have happened. So anyway, you know, that was then. This is now. Here we are. There's definitely, you know, things that are working and things that aren't. I haven't really been in the banks a lot this year, you know, but then on Wednesday I saw, you know, Goldman do a nice reversal on its 50-day, and then the upper levels were all being put intact. And I'm like, yeah, you know what, it's time to get back involved in Bank of America, Morgan, you know, and also Citi. I didn't actually buy Citi. I posted that chart. That was the best one out of all 3 of them, but whatever. You know, you look at Citigroup, and, you know, here was this upper level channel that it just broke right through. Okay, this could have been your buy right there. It's above the 8 and 21 day. Here's some momentum. I looked at the weekly chart. The weekly chart looks really good. I don't know who I was doing that with, but I was like, wow, I'm like the weekly chart. I know I had it in my 2014 thesis, but I'm like, you know what, maybe it needed another year of consolidating, which it did, and here it looks like it's going to try and get up and go again. You know, this is a pretty long channel that it's been sitting in between 46 and 54 for almost 2 years. So if it doesn't look back and stays above 54, really, you know, the clean move here is almost $8, which takes you to you know, about $60 or $62 at some point. It'd be nice to see the banks actually go. I actually went with Morgan. Morgan's been, I feel like, my go-to vehicle this year, where you know, last year it was Bank of America, or the last 2 years. So you know, here was your nice red dog reversal, so that put it on the map. Yesterday it poked its head up, and then here is your follow-through. Okay, I do have less Morgan on than I had coming in. You know, I had a decent amount for myself yesterday, and now I sold some, but I'm going to stay with some because this too, on the weekly chart, you know, looks like it just broke out above this flag and could continue. As far as Bank of America, you know, it's looking better. Okay, it basically took the year off. You know, some are trying to say that this is, you know, a cup type pattern here, where now it's developing a decent high-level handle, where if it were to break and close above 1750, you have 1480 to about 1770 cents. So that would give you a move, you know, north of the old high here of 1803, which could give you, you know, closer to 19. So that does look good for end of the year. We'll see what happens with the jobs report. We get a strong jobs report. It could continue on the daily chart. You know, it's lagging a little bit. It hasn't cleared this recent channel. I actually, at the end of the day, I bought a little bit more. So I have more Bank of America than I have coming in. And I had both of them coming in, and you could read my disclosures at the bottom of my Redler All Access note, or you see when I put them on live on the VTF. You know, I did also put on a little Goldman. You know, it's been very wishy-washy. I don't remember the last time I had a really good trade in Goldman, but at this point, it's setting up. It's tight. You know, it's been up here for a while. It's above the 8 and 21 day. Looks like if it wants to go, it could help squeeze the last move of the banks, and that would probably be up above 192. Let's look at the weekly chart on Goldman. Weekly chart, yeah, you know, a nice upper level flag. Seems like it's in the game also. So these banks look okay, you know, and the banks look like they've given us little trades all year. That a 3-day move, you can't, you know, you can't be too upset with that. Let's hope that we get a little bit more. Maybe tomorrow's a pause, and then Friday it continues. But you know, again, my rule is on day 3, I don't like to be bigger, you know, because chances are you're more vulnerable to a little bit of a pullback. But I did get bigger in Bank of America, and we'll see how this works out. It's, you know, it's pretty easy to manage. It's a cheap stock anyway. Also, Apple had you know, what's it called, an upgrade today. I think it got its first $150 price target. That I did take overnight also, and I still have it, a little less than yesterday. You know, it's still repairing. I think it needs a little bit of time. It kind of shook the tree right there with that, you know, big, whatever Morgan did, they lowered their estimates on tech, and then you had the big sell order, then it broke the 8-day. So it was good not to be heavy in this. You know, the time to have been heavy, remember we talked about tier 2 long was on this setup, or the time to have been heavy was after earnings when it held the gap and gave you a nice trend. Now, you know, it's going to probably be a little back and forth, but I still think that this is not going to be your historic highs. It would be nice to take this out at some point going into year end. Baba gave us 2 nice trades today, actually short and long. Early in the morning, you know, Baba was strong, and I was like, you know what, after coming from 105, you know, in a strong day yesterday, filled the gap, let me try and short some into 111.50, and it actually went negative, and then it gave you another trade, you know, to the long side. All in all, you know, it's building this nice symmetrical triangle where it would be nice now if it could go sideways for a day or two in this upper end, and then we get a juicy trade, you know, to take out this little descending channel. I'd rather see it break to the upside versus the downside, just because, you know, I do trade better that way. You know, here obviously was when I said Baba to head, I think 120 versus 60, and it did hit 120. There is that 120 print, so I don't have to put the Baba to my head. Happened in 6 weeks versus 6 months, but anyway, you know, now I'd love to see a new setup for continuation. You know, you know, I don't know, you know, listen, I don't do, you know, 140 slides on a company. You know, I don't have a big team crunching all the aspects of the business. You know, I'm just going to try and stay with it if it acts well. It's been, holding the 21-day. It's been a little wishy-washy, but I think that it's a huge company, big piece of business for a lot of the investment banks out there. A lot of hedge funds got involved in the 90s, and so it seems as if they're going to stay the course, and it has the potential of being a $140 to $160 stock in the next year or so. So I want to continue to trade it, learn how it moves, because you can make money long and short, and then there's also times when you can get a multi-day move when it starts to trend, and next time it breaks that downtrend, maybe we get that, and then we'll put back an option spread on there as well. As far as like Facebook and social, I'm not really loving the action there. I don't think this should have happened. You should not have a breakout and then come right back in the base. For us, at least, following the rules, day 1, day 2, we always trim on day 3, and then you had your doji. I think I actually even got out of it, and then it broke below this, and now it's really not that compelling. Maybe it wakes up again, who knows? But to me, I wouldn't think that. I don't think this should have happened where it came back in. So that puts it back on the C list. And Twitter, since earnings, been pretty much on the C list. It gave us one trade last week, right here, if you remember, and then that was after Facebook went, and then got a day 2, and then this one I had leftovers on, but use that as my stop. I said if Twitter's going to be any good, it should hold 40, 50, 40, 80, and it didn't. So now I'm out. But overall, it's definitely not acting well. It's really don't overtrade this thing down here either. As far as Netflix, some are thinking we have a little double bottom. Could be. Laz had I think he sent out a note today to cover 50% of your short. If you were short Netflix from this break here from off the charts, you now have somewhat of a double bottom. So some people took it home long overnight. I did not. Maybe it continues to push up a little bit. It's below all the moving averages, so still somewhat of a broken name, so be careful. He also sent out a message today to cover some of your Tesla short. If you were short Tesla from his note, he sent it out intraday. Off the charts now has a push-out program where he sends ideas via, I think, text or email, where this one, when it broke 240, he listed as a short, and I think they covered 50% of it today. Nice trade for those of you in off the charts. I think I also listed that area in the Redler All Access note. This week also, on Monday you had that capitulation type move in oil. So we were talking about maybe being tactical. You saw that red dog reversal in the XLE and XOM and EOG. So I put those in my note just to give you guys a little bit of a focus, saying you had your red dog reversal. Maybe there's a day 2, and you look at EOG, gave you more than a day. Broken stocks can give you a tactical trade. And even though this is broken, you had a gap that was unfilled. Here's your red dog reversal. Here's another trade when it cleared the 2-day pivot, and now it filled the gap. So that little setup is gone. Traders love setups. That was a nice little setup versus this. So small double bottom or higher low, with a little relative strength versus oil, because oil didn't do much, and boom. And XOM was the rock star of that. XOM, not only did the red dog reversal, it engulfed, that candle, showing some strength and power, and it actually filled the gap and then some. So, this was also a tactical trade if you went after it. And you can be tactical as traders. This, obviously the XLE is not as good, but here's your red dog reversal, here's your day 2, here's your day 3, and it could fill that gap somewhat. I just wouldn't stay too long here because it is broken, but you can get tactical trades. Same way we talked about, the TLTs. There was a nice tactical trade above 119.75 or 120 and a quarter, and then when it was above 122, I'm like, you know what? You probably should take some off here, even if it goes higher. It's day 4, and then the last day or so, I'm like, let's see if we get a red dog reversal. And in the TLTs, you had a small one. Okay, here was a nice trade. Okay, if you took it, when it closed above this 120.50, gave you a move, nice percentage move, right? This one, 122.67, actually went above it this day before reversing, and now came back to the 21-day, gave you a small tactical red dog reversal there, where it opened lower and then reclaimed this spot. Okay, reclaimed 120.29, and now it looks like who knows, maybe it tries to fill this gap. So I actually positioned back in some of this. I also took it a little bit as a hedge because I have a lot of the bank exposure. And then a lot of other names on high beta have been weak. This morning everyone's like, oh, what's the news on Amazon? What's the news on Amazon? I'm like, the news on Amazon is that they sold Cyber Monday. Look at the engulfing bar on Monday, which said, okay, this counter trend move is over, or the constructive action that it had is now giving you a warning signal. You look at Amazon, that was right here, okay? You remember this, constructive or tradable move from the lows. Remember, if you miss this move after earnings, it's okay. This was your higher low, your red dog reversal. This is when it cleared that little downtrend. Remember, we talked about 308 and then held steady, and then even gave you a nice bull flag. And this was looking okay. And could this have continued if it wanted to? If the buyers were still there, yes. But when this happened, boom, that had to get you away from this stock and saying, okay, this trend is now over. Okay, this is now, no longer something that, is a focus, especially from the long side. Then you had a small inside day-ish, okay, and then boom. So now, maybe can you get like a small red dog reversal tomorrow, on the low here for a tactical trade, which people tried to do there, perhaps, but now it's not in a trend anymore. It's now a bit broken and needs more work, on either side. Also, if you look at Baidu, talked early in the week how I think, these momentum names are vulnerable. I have such a hard time with that word, vulnerable. And this broke to the downside. So I think most people aren't in it anyway. They had their stops around 240, which is good. And now it's come back into the, just say where it broke out from. So maybe there's a trade here, but no longer is it looking like a momentum breakout trade. Now it's looking like a tactical little, scalp here and there. Google, which never broke out. Okay, remember this descending channel that I lost money trying to buy a few times here? Okay, never broke out. That's why I did little paper cuts and I was like, I want to be a buyer if it clears this with authority. Did it clear with authority? No. And then it actually broke below this area and it's just in no man's land below all the moving averages. So it's not a swing long. It's a potential trade here and there, but this is on like the C- list. It's been doing absolutely nothing for a while now. At some point, who knows, maybe next year it wakes up and starts acting better, gets above the moving averages. It's been consolidating what's been a really big move for this stock, for multiple years. I remember when I had this as my play of the year. I think that was in 2012 because of the size of the channel, and wound up doing pretty well. So anyway, it's just if you look at the weekly or even the monthly, it's just consolidating and just not a name to be a focus. And it actually is now below the 200-day here, so it's showing actually maybe some institutions are actually even selling it versus the market. So I don't know. This is not a name to be sitting in right now for a swing. And if anything, some people probably short it. So if that's you, congratulations. I'm not going to just sit in this short. I'd rather see if it wakes up at some point or just avoid it. And that's really it. Let's see what else is going on. Some people pointed out Coke. Coke had a weak day today. So if you're looking to short Coke, it broke this to the downside. I don't really trade these names that often, but here's your wedge, broke to the downside. I think Pepsi also had broke its 8-day and closed below it for the first time in a while. So maybe if you were long both of those for what has been nice trends, you sell some. Semi's really strong today. Let's go there. SMH's, new highs. Look at this. What a quinky dink following the 8-day, this entire move. So do you short something that's above the 8-day, acting strong and trending? No, you look to buy it. So the semis have been strong. Look at this clack. What a move. Wish I was actually trading clock. I used to trade this thing back in 2000 and change, and it was a good move. Look at this move right there. Another bull flag, another bull flag. Look at that. Nice trend there. I think Broadcom, people were talking about today too. Looks like not quite as frisky as clack, but looks like it could get above this if it wants to. Oh, what a quinky dink above the 8-day ever since this gap up here, and they let it catch up. So what are you seeing over and over? Stocks that are strong and sectors that are strong are typically above their 8 and 21-day. And when they're above their 8 and 21-day, you try and be long. You try and look for setups to use a tier system. When stocks are below the 8 and 21-day, you know what? You're not just looking long. You're looking for some short setups. If they've been oversold, maybe you find an RDR. And then when they do bounce, you look for the H sell setup pattern for additional weakness. And you combine all these little tools that hopefully you've been learning from the morning call and the recap and the VTF and off the charts and all the contributors. You then could put together a few days, a few weeks, and have a career. And as far as if you have a macro plan, okay, because now everyone's talking macro plans because we're coming into the end of the year, I want to congratulate you because a lot of social media out there, a lot of networks, a lot of everything, everyone's always talking about what could derail the rally. Why shouldn't you be investing? The market's rigged against you. But meanwhile, if you put, X amount of dollars in the market the day before the 1987 crash and put it in an S&P fund and did it every single month the day before that crash, you're doing very well. If you did it the day before the tech bubble burst, even NASDAQ, just so you said, I'm going to pick the Qs, and you started, which was painful, at 4,500, and then boom, you had the big correction, but you said, you know what, I don't care, I'm 25, I'm 28, I'm going to do this for 30 years, and you kept buying every single month for the past decade. Now with the NASDAQ back almost near 5,000, your average cost is probably about 3,500, and you're sitting pretty with that historical percentage gain. Same thing, the financial crisis. If you bought the day before Lehman went bankrupt, the S&P fund, and kept and stayed the course, you're doing well. So lots of different time frames, lots of different ways to make money. Have a macro plan. Then also, if you have time and you want to find really good stocks that could be doubles and triples over the course of multiple years, you have to put the time and work in. And if you day trade for a living, or you trade for alpha and cash flow, then you really have to put in your time and keep working on your process. And if you happen to do all three, you know what? You're probably doing pretty well for yourself, and hopefully you have a routine that you like, that you can do every day, so you have longevity doing it. And that's about it. I'm tired. It was my friend's birthday last night, so I apologize for the red eyes in the morning call. It happens. So tomorrow I'll try and be a little bit more chippy. So have a good night. See you tomorrow.